Yo, what up everyone? In this video, I want to talk about two different trades that I took, along with trades that we took in my Discord community with some market context, because there's a lot of lessons the past 2 days that we could use as building blocks for trades we're going to take in the future, and we could expect to take high quality trades off of the psychology and this type of analysis. All I ask is if I provide any value to your trading, I would appreciate a thumbs up on this video. And if you haven't already followed me on Instagram at Investitrade, I'm going to link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you are not going to find anywhere else. The link is in the description below. You're definitely missing out if you're not following it. But now let's get right into this recap. For the first setup on Monday, February 7th, we have to go over the pre-market plan. I post these every single day in the Discord, which is included, and it's only available for Investitrade course members. Link below. Basically, of setups I'm watching, the exact levels I'm looking to trade around, and I update my commentary throughout the day of what I'm seeing form and happen in real time. First one was on the S&P, and it was the start of the week. And what I said for me, what was key was we were trying to form demand overnight, and we were rallying. If you look at the right of the chart, right into the 45.10 and 45.29 key level. This is the S&P 500. The first scenario was I was watching for any selling activity similar to end of day on Friday, where sellers step in, and I'm looking to play puts if price could reject below supply and the key level at 45.36. And we also had a bullish scenario if we found buyers accepting value inside of supply and we had demand below. So essentially, I wanted to see any type of selling activity similar to Friday, which we see right here. What happened on Friday and the day was I'm going to remove this for now. We came into a key supply zone that rejected once on Thursday. The following day had a nice rally into that and a nice sell-off. This end of day sell-off on Friday provided a nice opportunity for a move down that I know a bunch of members capitalized on the downside move, but this formulated a new supply zone. So essentially what's happening here is new supply is forming because of old supply. And that gives us a very key clue to the auction because now new sellers are stepping in and showing responsiveness to already an existing area where we saw sellers step in. So now we have the supply equation definitely out of balance compared to buyers. And our idea here is as long as sellers step in now at either of the supply zones, these are our levels of interest, we can look to play a downside move, whether we're looking to short the S&P or whether we're looking to play SPY puts. We look to play a downside move. If we could get some selling confirmation inside of the supply zone, we want to trade on the same side as the participant zone or imbalance that we're looking to trade on. So then the market, the past maybe like week and a half or 2 weeks, has been lacking volatility. It really we haven't seen any fast, crazy moves that I would like to see. And that's totally fine because usually the best moves come out of balance and when volatility starts to pick up. And if you're the first one to get in while the volatility is picking up, that's when you could get a quality setup. But this is where it's going to test your patience. And a lot of new traders have no patience and they fail because they fail to recognize when to sit on their hands and they fail to recognize when to actively hit the market and be an active participant in it. So essentially, we got our rally into that 45.10 key supply zone, the exact same one that formed on Friday from that drop, and we had a nasty sell-off. Now, I did not trade SPY because NASDAQ had a little higher quality of a setup. This had more volatility, and I strive in volatile conditions. When there is volatility, I take amazing setups, and I make the most amount of my money is when there is volatility, and I'm sure a lot of traders will relate to that. It's just being able to recognize when it's there and when it's not there. But for NASDAQ, I said what's key for me is this 14744 supply to 14828 key level. So let me just zoom out of this chart so you can see it a little bit better. I'm going to go like this. And I said if there's any selling pressure below or new supply created or a failed rally inside met with selling, I'm open to playing short here as this is an area that sellers have control. We had demand lower at 14574, and we were watching for price to potentially bounce at it if it did, and then we had an upside plan. So very similar to context to the S&P. I'm actually going to show you these charts. The same supply above from the sell-off on Friday. Now the market opens up on Monday right inside of the supply zone, and it was very hard for me to be bullish if we were below this key level of resistance. Only if we could create demand inside of supply that would validate a potential long setup. But if sellers reject inside of the supply zone, I'm open to playing puts. But what I liked here was we were putting in a lower high inside of supply. I like to see that because what that tells me is sellers are having control and buyers really do not have the strength to bring us up past the previous high. And why we have a previous high is because sellers stepped in. So what actually happened here is we formed a new supply zone from this move to the downside. I'll keep it as a green line for now. So this move to the downside formulated a new supply zone. So not only did we have new supply, but we also had a lower high being put in inside of a supply and inside right at the new supply zone that did form. And at 1040, I played the QQQ 358 puts. In this analysis, gave me added confirmation because right at 340, pull this up here, when the market looked like this, next candle, we started selling off. The S&P was selling off from supply. It gave me added confirmation with this NQ setup. My stop loss was above this high. I was really risking not that much, and I had a target at demand a little lower. Now, I need to focus on sticking with the plan a little more. I gave up, or I didn't give up. I didn't get as much profits on this trade because I was not a fan of the volatility and I wasn't a fan of the aggression from sellers. But in hindsight, I should have let this trade develop a little bit more. As soon as we broke this wedge, so I could draw a wedge like this, and then the lower highs right here. As soon as we broke the wedge and we broke the low right over here, at 11:20, I got out my full position. I didn't like how we were consolidating at the lows. We broke the lows, and usually when there's not a lot of selling pressure or continuation below it, it's a good sign of a reversal. So I was a little skeptical with that. I was okay with a 100-point sell-off on the NASDAQ. Nice sell-off, especially trading same-day expiration. And as soon as I exited, about 5 minutes later, if I was more patient, I could have sold at demand, and these contracts went up about 200%. I took 50%, a little under 50 on this trade. Never going to complain about that, but I put it in my journal to be a little more patient and let it develop. Don't get freaked out and just trade what the market's giving me. I really had no reason to react down here and get out of this position because this thing continued to sell off right into demand where we found a bid. Now at this time, the S&P, what kind of validated my exit on that was the S&P never broke below the wedge. So when I got it out of NQ, it was stolen below low a day, but the S&P failed to break out of this wedge. And then when I sold out of that position, we broke out of the wedge, gave a possible another entry scenario over there, and then we found the bid. Now, these charts are going to look identical. I mean, as NASDAQ was selling off from supply and bounced off demand, the S&P also bounced off of demand. Or not demand, it just found a bid. Now, I did not play the long side. If you've seen my past videos, I always say, like, when I go short, I don't like covering and then immediately going long. So I didn't take this in hindsight. You know, it worked out. I know a bunch of members in the Discord played this long and made, 4 or 5 figures on this trade. End of day on Friday, the S&P broke above the high. And keep in mind, remember what I said from the pre-market plan? If the action is similar to Friday, it's going to give us a high quality setup. The S&P on Friday hit supply and sold off. On Monday, yesterday, the S&P rallied inside of supply, and look at that. It's very identical to Friday, had a sell-off. Added confirmation for this trade was we broke above the high, failed to stay above the high, and if you were watching the tape, there was very large passive sell orders at the high with aggressive buy orders wiping away the liquidity, yet the market could really not move up. And then as soon as we started to move back down, sellers aggressively kept hitting the market and then gave us enough pressure to move us lower. At this point, this is just showing you the power of options. No one's ever going to get the low. No one's ever going to buy the high, sell the low. But SPY puts went from a low of 35 cents to a high of $4.10. That's over 1,000% on the contracts in a 40-minute period. Even if you get a quick move, let's just say when we rejected supply, let's just say we waited for the sell-off below the previous high, we got short, we played the SPY puts at 3:20 Eastern. At 3:20 Eastern, these SPY contracts were at 56 cents. And let's just say we sold 20 minutes later at $2. That's still a 300% return end of day on a high quality setup, rejecting supply, and a pretty nasty sell-off. Now, another setup, this was from the pre-market plan. I gauge all my setups from what is quality and what is low quality. And I basically look at the market for added confirmation. Boeing, straight from the pre-market plan, I personally did not take this trade because I didn't really classify it as high quality with how the market was chopping out as Boeing was rallying. But I said if we could break the 209, 210 key level with some strong interest in the market, I'm going to be looking to play calls, targeting the 213 area. Some decent volume above the 209, 210 key level, came back, retested it. When we break above a resistance level, if we come back and test it and it acts as support and then starts moving up, we could look to enter the trade, stop below the low, and then maintain our target, which was 213.48 supply in this case. Consolidated all afternoon, found a bid at VWAP, and this consolidation actually formed new demand that we tried bouncing at it today, but it was very, very choppy. Actually bounced off the 210 key level again. But the action like this, I try to avoid. Again, it's all about knowing volatility and not a lot of volatility, knowing imbalanced, knowing balanced markets, and trading accordingly, getting your metric of what you consider a high quality setup. What I consider quality might not be quality to you. It depends on your journal and how you trade based off of your personality, your style, your edge. Everyone is different in the market. Now that's going to bring me into Tuesday's trade, February 8th. And just like yesterday, the market was very balanced. It was choppy and it lacked volatility in the first, let's just call it, hour. So the pre-market plan, we had supply above. We really didn't have any demand below. And we also had the NASDAQ, which was setting up for a balance if we continue to trade inside these levels. It wasn't until intraday when something really happened. Now, just looking at the NQ chart, I didn't trade NQ today, but that demand that we bounced at yesterday, we actually moved further into the zone and put in a higher low at it. I personally removed this because we really didn't find any buyers overnight, and my chart really didn't have anything supporting us below Friday's lows. But now if I put this back on the chart, it looks a little differently, and we did get a clean rally out of that into supply. But on the S&P 500, remember that drop again from yesterday? That drop formed new supply right here at 44.98, and then we had that 45.10 supply, which was we rejected yesterday. Essentially, what we're seeing the past 4 days is supply, or is the market rallying into supply, rejecting supply, forming new supply, and then the following day testing that supply and selling off. So in the pre-market plan, I said when we test it again and when we have a different reaction from what we've been seeing, then we're going to get a different result. Think of it as an auction in the market, right? Or just use common sense with participation. If we get a different reaction, we're going to get a different result. Now, it was very difficult to trade in the first hour. I was stressing patience like I do every day. If you aren't patient, you're going to lose every time, especially when the market is in such a tight, balanced range like this. But now looking back at the chart, this consolidation, and I even put it in the intraday commentary tab, this is exactly how I update my thought process as the day is developing and my thought process of what I'm seeing in real time. The market was balanced, and we saw some buying volume coming into the market pretty early on. And then I said we have some actual strong buying here at 44.65 and 14.520 on the NASDAQ. New demand is forming. If it's successful, a rally into supply is very likely. This may be met with quick selling before a pullback continuing higher. Now, keep in mind the supply zones that I had above earlier, I said I want to use them for targets for long positions. I'm not open to playing puts on the first test, unless a lower high gets put in. That's because new demand was being created at the lows. When we have new demand, that means there is new buying in the market. There's new buyers being factored in. And then when we get the aggressive side, that buyers are more aggressive than sellers, we're going to move up. And then that balance or consolidation is going to validate demand. So at this point, just watching the tape, there was some decent buying coming in. I don't know if it was shorts covering, but the move after that and the structure that we get in the market is going to dictate what's going to really happen next in the auction. And this consolidation right here, we were speculating that new demand was going to form if buyers eventually hit the offer and aggressively, moved into the market with it moving up. We had a nice downtrend line, and if I go to a 1 minute chart, you're going to see it a little better. It's hard to see now without watching the tape happen in real time. The time in sales was speeding up pretty nice, and there were some aggressive buy orders coming through at 10:46 and at 10:45. And I long this at 10:45. I'm going to be honest, I really didn't have a proper stop loss in play that it made sense from a risk to reward standpoint. But I felt like this was a high quality setup. Any trade you take, it is not a valid trade unless you have a proper stop loss in mind and a proper target in mind. In this case, my target was the supply at 44.98, and I did not have a stop loss in mind, which honestly is not good. It is not something I'm proud of, and I don't even want to even say it because I don't want people to trade that way either. But if you do not have a stop loss, you do not have a valid trade on your hands. There was really nothing here close to my entry that signified where I was going to be wrong, that made sense from a risk to reward standpoint. It would have to be down here, which is about 14 points lower, where my reward is only 20 points. So not bad risk to reward. It really didn't make too much sense, but I like the buying volume. And because of that, I treated this as a scalp. I was not comfortable holding this into supply, although it worked. The market made higher highs, made higher lows. And as soon as we had a quick push up, I got out my full position, quick 10 points on the S&P. Again, a common theme that I've been noticing is I'm not holding until my target. And this is something that I want to work on. You have to follow the plan and not deviate away from it, because this hit supply. This found no sellers at supply. It actually found more buyers, which is why I avoided the short position at supply unless a lower high was put in. And then we just consolidated, pulled back into VWAP, and had a nice end of day rally. This last trade, a key point I want to make, I said it earlier, follow your plan. Have a predetermined plan. If you do not have a plan, you do not have a trade. Stick to it. Do not let any other noise distract you. Follow it. If it works out, it works out perfectly. If it doesn't work out, you have to exit for a loss before it becomes a bigger loss and focus on another best opportunity. Execution was good, but trade management was not very good on this setup, and that is something that I relate to my emotions, and it's something I'm continuously working on because I think emotions are the biggest thing to any trader. But nice bounce off VWAP and nice rally. The same analysis on NASDAQ in the intraday commentary tab. Looks like some strong buying here. Buying volume was picking up at 10:17. New demand was forming on the rallies. I want to use supply as targets for long positions. Demand was created at the lows. New buyers are factored in, and we had the possibility of buyers accepting higher prices inside of a key supply zone, which basically means bullish. But let's see what happens. Very good way to start the week. I'm 2 for 2 on my trades. There were definitely some more opportunities that I missed out on, but as long as you follow your plans, market will be here tomorrow. The market will be here next week. It's never going anywhere. You get paid for your opportunity, not your time. I'm going to leave you all off on that note. Drop a like if you enjoyed this video. Comment if you have any questions. And be sure to check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord. I seriously plan on increasing the prices very soon. There's just too much value, and the Discord is an additive feature that I do not charge for. But besides that, peace out.